Alright, so I'll make this TLDR as possible because it's honestly too much to type. So ES on left is extended, RTH is regular. What you need to realize is, if you look at a extended chart, extended hours chart, all of this right now is balanced. So essentially, anything at this price level at 4460 is offered and it's balanced and it's good and it's now invisible to the algorithm. So the reason that's so important is anything there is basically does not need to be touched at all. Offered buy side, offered sell side, offered buy side to fix the sell side that was here, offered the sell side to fix the buy side that was here. Wick down move, and then it leaves. That's the key. Is this breakaway? This is a breakaway gap. This from the 11th is a breakaway gap. So anything that is from the 11th should not be touched. If it is touched, this low is probably already on lock. If this low is even remotely touched. Now the reason that's so important is when you tie this into RTH, you'll notice the low of Wednesday. That is this swing low here at 4496. It also lines up with the swing low I marked down like the 1 hour. Anything right here does not need to get touched again because it's all balanced. So there's no reason for any of it to be here. I know this fair value gap, well, not the fair value gap, but the whole box down here was setting up for like 4460, but really anything here shouldn't have to get touched. So you can come down to underneath this level and possibly fill this in under like 80, but it really doesn't need to. Because again, all of this is balanced, so it's all invisible right now, so it's just going to be seen as liquidity. There's no inefficiency that needs to get fixed, essentially. So the reason that's going to be so important going into next week is when you're looking at what can I use in terms of PD arrays, let's say I'm bullish next week. I'm going to say, okay, if I'm bullish, what does a bullish week look like? Well, it usually goes, Monday, Tuesday, Wednesday, one of those three lower, and then high of the week, all that good stuff, power 3, right? So if you're assuming that's going to happen, you got to ask, how deep can this thing really retrace before we need to like switch bearish almost, is really what you want to ask yourself. So when you're looking at all this inefficiency and balanced price range, the only thing that really might need to get fixed is like 44.90. And even then, it should just be a break. And it should not need to get touched because of how much sell side and the buy side that was fixed from like early July. Like this should not need to be come down to and touched at all. Like anything under 44.6 should literally just be, if you could honestly sell stop 44.60 and shoot for 44. And it'll probably work. I'll be honest with you. It'll probably work just because of what's balanced. If you're down here, you shouldn't be. Like, you literally should not be down here. This entire move, especially in the 15, has all been fixed. The only slight inefficiency is around 44.90, and even then, I would be very reluctant to have this random spot hold and go for higher prices. Now, the reason I want to talk about NASDAQ is it's much cleaner on NASDAQ. Same thing, daily RTH. You look at this, you'll see the two fair value gaps, right? On the daily. But you need to apply that exact same logic here. All of this underneath, from Monday, Tuesday, balanced. All will act as opposing liquidity. This gap from the 12th is the same as CPI. So there's a lot of eyes on this swing low. But if you are even remotely down into this area at 15.3, you can basically, again, sell stop down to 15.65. Because all of this is balanced, I should say, I'm sorry. And it's good to go. So if you're really looking for inefficiencies in areas in price, it really has to be this top fair value gap. It really needs to be the top fair value gap, and it cannot be this bottom one. And the reason that's so important is like you have on the 4 hour here, this is balanced. It doesn't look balanced on an RTH because it's a 4 hour, but if you look at it on a daily, this is all balanced. None of this down here needs to get touched. If it's getting touched at 44.60, it's dead. It's literally dead. You can go for 44 previously low instantly. And you'll see what I mean if it happens and if it prints down there, which it should by definition. But in terms of like an OTE and everything like this, if we're down that low, this literally should break. And if you go to like a 4 hour, quadrant here. Again, it's the same thing. All of this is balanced. Sweeps lows in the early of the week. Balance, all this is balanced. Because this right here, this up close candle leaving is just, you can see the up close and down close getting fixed here, as well as any inefficiency. You can literally see the bodies fix themselves. It's actually scary impressive how this thing moves. Inefficiency, look at the bodies on this when I'm talking about this. Ignore the wicks. Look at the bodies here. Buy side offer, sell side offer at the same price level. FEG fixed. FEG that was fixing this old one here gets fixed here. And because this broke, fixing this is now getting fixed here. So when this is leaving, this is good. Now normally, yeah, you would chain it just like that, but you need to realize that this is a breakaway gap. All of this is balanced and it's good. So this is price literally leaving because it can't teleport. It cannot teleport from one price level to another like in a gap. There's no opening gap risk or anything like that, so price cannot teleport. So it physically has to deliver through all the orders, but once that area is balanced, there's no reason for it to come back to it. And that's part of the reason that when you see breakaway gaps or anything like that, you can just short it the moment it's touched. Even though the low hasn't been touched, you can basically sell stop whatever it is, like say breakaway gap down to the low, because it probably worked, because anything under that breakaway gap is balanced. And the only way BPRs ever hold is instant reaction, or it dies immediately if it's even remotely touched again. It literally needs to be a one tap move away, and that's it. It cannot even sit there for a second time. It'll literally die. So when you're really looking at what is unbalanced, anything underneath Wednesday's low is dead. It is basically dead. So if you have that, and again, you can see it on like a 15, it's all fixed. It's all already balanced and good. There's no reason to remotely do anything from Monday or Tuesday. Sure, you can argue, this, but even look, it was already fixed. This is price leaving at 1,225 or 40, at 15,240. This is just price leaving. All this SIBI fixing is just getting fixed here. It's all balanced and good. Any inefficiency that was caught was fixed immediately. So a lot of this is just a huge LR. And when you have stuff that is balanced, it's invisible to the algorithm. And the only reference points that will get used are not going to be PD arrays inside of it. They're going to be, because there really shouldn't be, for one, the PD array should already been used and mitigated. Maybe that's the wrong word for it. The PD array is essentially used and it's useless now. So if you even remotely back it down in this area, it's all busted. None of this should hold the moment we're even down here. There's no reason for it. You can get a reaction, sure, like some random something, but like most of it's balanced, most of it should act as opposing liquidity. So when you're really looking at, well, what needs to get fixed, there's nothing, and that's the point. There's nothing that needs to get fixed. Even look at this body. Literally look at the body of this candle here from 7's high, and look. It literally fixes this perfect. I know the line isn't angled and everything like that, but if you look at the bodies of the 15 or just any candle in this is all good. So there's no reason for the market to even exist down in this area, which is why I kind of had this circle and then push down. It's because this is a breakaway gap. If you're existing in a breakaway gap, it's already dead. And that's the point. That is the whole point. So when you're really looking at this RTH gap, this gap, it will fix itself eventually. Full stop. It will fix itself eventually. What it will not do is be used as a reversal or anything like that. It will be used as liquidity. And you'll probably get a sell side delivery, candle print there, a small retrace up, and then it'll keep going, is what you will probably get if you ever are down there. You cannot look for something that is that far down there to be used because it's balanced. There's no reason to be there. And that's the point. So if we're going back to, please. We're going back to like this NQ2 hour. This is down at 15.4. Yes, I didn't realize that. So when you're down, I guess it is like the same spot. When you're down at like a price level like this, there really isn't any reason to be, truthfully, because it's all broke. It's already broke. Like this is balanced. There's no reason to exist here anymore. All of this balance, all this is just a breakaway gap. That's all this was. And again, look at You won't see it on the 1 hour, but you can notice how this high stopped, this low was immediately where this high was. Why? Because anything below it was balanced. So it literally came for the last inefficiency because of what does retracement seek? Internal, liquidity, and imbalances. So when it's retracing to go for this imbalance here, all it's doing is fixing up to what it needs. Anything below that point that it filled is balanced. It doesn't need to be there. So if you're assuming that everything underneath, say this red line, is balanced, and you're moving away from it, that's all balanced too. So literally all of this is good. All of it is. So you don't want to be caught. Now you can say, yeah, there's a PD array there, but like if you want to look at what is balanced and what is truly inefficient, it's not it. It really isn't it. And that is going to be the trap, so to speak, going into next week. What you need to watch out for is like, again, they're breakaway gaps. They literally do not need to be touched at all. Like 4460 does not need to be touched. Now on ES, a little bit better. It looks a little bit cleaner because I already had this liquidity pool marked and then, pairing it with these sell stops under 44. So yes, Wednesday can act as liquidity or a sell side target, but it should never be used as an area looking to reverse price or anything like that. Let's see if I think you yes, like ES4, it literally needs to be this order block, even though it's premium. And it's going to look super shitty. But you have to use this. Now, because again, anything this around, what is this, like 45? Anything around 45 is already dead. 45 is, well, 45 is up here, so I guess maybe not. No, 45 isn't actually dead. But this bear, or this PD array here, this breaker is smoked. It's already dead, I'm telling you. 4460 is already, this breaker is useless. Do not use it. So now you can get something at 50% and then go. That'll still line up with 4490 and again would technically pair you with this sell side that I had marked out already. But other than that, you can't go lower. Like you literally cannot go lower. You need to have low of the week print in here. It needs to go. Otherwise, anything below, it's already dead. It is literally already dead. The only thing the algorithm will go back and reference is the old low. The old swing low on the daily or whatever it is. So be very, very cautious with what you're using as targets for your PD arrays. Yes, you always want to use them at whatever is discount, but it needs to be inefficient. And that's the point. That's what's so key to remembering is even though you have, say, this gap here, wick, VIB, it does need sell side delivery by definition. But if you're delivering sell side there, there's no reason for it to turn around afterwards either because that area is balanced. So if it's coming down here to fix anything this low, it's already toast. It is already toast, and you give up, and you should honestly give up the low of Monday, no question. Or at the very, very least, seek it because this thing can only look backwards. It can only look backwards at old reference points that it's made. Now, the reason that is so important... Ooh, I don't know if I can find it in time. Hold, please. So, the reason this is so important is this thing can only look back, right? So, on NQ on Friday, I took this screenshot. It was like 11 a.m. East. Point is, this thing can only look backwards. So, prices are on here. No, it's like here. Oh, yeah. Anyways. So on this candle down here, you have to remember, what does the algorithm see? We see this as candles, and that's part of the problem. And we think it means something when it really doesn't. The algorithm no longer is seeking, because again, look at all this is balanced, truthfully. Buy side offered, offering sell side on the FEGs where it needs to be. Notice how the bodies, again, of this candle close right here just to fix that. If you literally turned off wicks for half a second, you see what I'm saying. Ignore the wicks for a second. Just look at the bodies on this, truthfully. Offers buy side, offers sell side. The sell side that was broken, being offered to fix the buy side here, is getting fixed here, and then it's continuing. So all of this is balanced. It is now invisible to the algorithm. It does not see any of this. It's already used and balanced and good. There's no reason for it to come back to even this. I was incorrect on. I didn't realize that this poked above this high, and this was the FVG getting filled. I didn't realize that because broker. But if you look on a futures chart, it does fill it, and it takes this high right here on this candle. So even more so. So this shouldn't even be wrong. So all of this, again, was invisible to it. It was already balanced, it was already done and used up to the algorithm. So it has to look back. What can it look back at? It can look back at the low that was here, but also these two down here. So the idea is anything that is printed, say for example, after the screenshot doesn't matter. So anything that was existing from here to here did not matter at all. Now the reason it doesn't matter is because any long setup or any bait that you could have had in here is useless because the algorithm is really looking back at these lows here. And that's why it ran for all three of them. That's why I had it marked out. Is because this is what it sees. It does not see anything above here. We only see because of candlesticks. All it sees are these lows. 1, 2, 3, and then the other one back from here. It was right next to it, so it really doesn't matter. But the whole reason I'm even doing this whole speech is you need to realize that this thing can only look back. It can only look backwards. It always has to move forward. And once the candles close, it's solidified in time. And all it seeks is liquidity and inefficiencies. If there's no inefficiency, it's seeking liquidity. Which again means if you know that the algorithm sees these lows, all of this is fake. It does not matter. It's not going to be bullish. Even if it looks bullish, it's just to trap people. Because all it sees are these lows here that it went for. And that's the whole idea behind it and why it went to where it did. Because it's only going to seek certain things. Once it's balanced, it's invisible. So how we're going to tie that back into the whole speech is looking at, say, a 1 hour. All this balance, invisible. No inefficiencies are down in here whatsoever at NQ or ES on Monday and Tuesday. Nothing. Absolutely nothing. Only real inefficiency is on Wednesday. That's it. Maybe on CPI. And again, that's on one of the indices, and I mean barely. The reason I'm also saying is look at the gap here that was printed. All the fixing for the price level was offered prior. So this should be a breakaway gap. It really should be. On ES anyways, it looks more like a breakaway gap. On NQ, I understand the idea more so, but again, all of this is balanced. It doesn't need to be here at any of this. So you will know that if you are even remotely trading in this area, because remember, it only looks backwards. It only looks backwards. It cannot see forward. It literally cannot see forward. It's going to seek something in a reference point and use PD erase to get there. And that's going to be its medium, so to speak, to traverse price, is really what it's doing. So when you're like here, so you got to apply the same light. If you know the algorithm is seeing these lows as pending liquidity as a draw to go for, you know that anything after this, even if you get a bullish setup in here, whatever it ends up being, it doesn't matter because it's actually seeking these lows down here because this is all it sees. And that's the key. And one of the big takeaways on how you cannot get caught in like fake structure or like internal structure and all that stuff is because it actually doesn't matter because it's not looking at it at all. Now it might bait people to go long, but again, it's just to do what? To get them to sell short. Just to trap people long so they can generate more sell side to go into. Because I mean, if you look at like the 1 o'clock low, it was a pretty good bait up until 2 o'clock, and then it crushed everybody. Why? Build a fake low to generate more sell side just to sell into it. Because again, the algorithm, once all this is balanced, it sees nothing up here. It's only going to see these lows down here that it went for. So if you're at any point in here, any structure you get will probably be fake, and it's going to seek what it sees, because that's all it sees. Anything that exists or is printed after the fact doesn't matter, because it's still originally seeking the area down here in this case, and that's the draw. So running it back to ES just for one last time, you can still use this Wednesday low as liquidity, absolutely. But you should by no means look for that to be like low of the week. Because you can't. You really can't. Because again, it's all balanced. It should all act as liquidity when it's balanced. It's useless. It's done. It is now invisible to the algorithm. The only thing it will now reference are the old swing lows that were left, and everything else, it could get, the mitigation reaction, again, because I know mitigation is a bad word, but you could get the reaction out of it like you do here, like how you get the reaction after midnight, below midnight opening price at 1 o'clock and everything like that, but it still crushes you. Why? Because it's still seeking these lows back here. Anything that exists or is printed after the fact, so assuming all this is, balanced and invisible, once this order block, BPR on bodies, whatever you want to call it, is fixed, it's invisible, it's balanced, it's no longer seen to it. So you have to remember that this thing only looks backwards. So if you're at this point in time and this is already filled, what do you have to look back at? You have low, 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 and low. Okay, so that's what the algorithm is seeing. That's what it is going to go for and look at and move towards. So you know that any bullish stuff you get here like this, it's fake. Why? Because it's actually looking back here to go for. And it's just a sell side generation. That's how people get trapped on the wrong side. It's like I guarantee they presented bullish PD arrays in here. They pretty much had to have if price went higher. That's how price moves. So when you're doing that, you got to remember that is like the whole trap, is this thing can only look backwards and it only seeks inefficiencies or liquidity. So if there's no inefficiency, it's liquidity.